Hello everyone and welcome to my morning report analysis videos on Monday 9th of July with me, which is Pro Market Analyst at Hantec Markets. We've got a pretty positive market that looks today, which we're going risk positive and dollar negative. That seems to be the general mood. Look at this dollar index, which is now topped out. Several charts driving this move: euro dollar above 17.20, cable above 133.15. Two moves that are driving this dollar correction, and that's coming in the wake of the payrolls report on Friday. There was a jobs growth of pretty decent proportions, just over 200,000, but ultimately the average hourly earnings just didn't pick up again, and it's just alongside the fact that unemployment rose to 4%. That sort of plays into the whole argument that there's little real pressure for the Fed to get more aggressive on interest rate hikes, and subsequently the dollar has slipped on the back of that. So, where are we looking at on the board? Well, we're still pretty positive on euro dollar. There's a big Brexit factor in the outperformance of cable today. We had a cabinet meeting on Friday in the UK cabinet. And they came out with a decision to sort of drive a softer form of Brexit that ultimately has initiated the resignation of rather the harder Brexit, supporting Minister David Davis on Monday morning. But generally speaking, anything that sort of pushes Britain towards a softer Brexit is going to be positive for sterling. Now the key would be whether Theresa May can survive that politically within her own party. But for now, certainly there is a gain to be had on sterling, and allied to the dollar weakness that is driving cable higher. That dollar weakness is driving gold higher as well. 1263. That's a close above 1261 would certainly be a near-term breakout. We've also seen positive moves coming through the equity markets as well. Fed not being more aggressive again helps equities. So yeah, we're looking at some decent gains there. So pretty much positive across the board. No real economic data today. So we are as we are. So nothing to really sort of rock the boat unless you see some more trade tariff dispute concerns arising, but at the moment we're pretty solid. So my chart today is Aussie Dollar, and Aussie Dollar is a reflective of the improvement, really. We've got the Aussie Dollar rising, and it's rallied through the resistance at 74.45. That completes a little base pattern. And the overhead supply is being broken now, so that 74.45 basis old resistance becomes new support on the breakout. But you could sort of measure this 73.45 on a sort of on a conservative basis, gives you 100 pips. So that gives you 75.45 is your initial target, but then you could sort of extend that to 73.05, sort of 73.10, which gives you around about 125, 130 pips of upside. So there is potential for this to move, and look at this within the downtrend. It's just basically rallying within the downtrend, isn't it? As these momentum indicators picking up decisively, RSI rising above 50, gets towards 60. Mid-50s, 60s tends to be seen. MACD lines bull cross, stochastics accelerating higher. There is legs in this move, it would seem. Hourly chart shows the breakout above 74.45 on a decent basis. 74.75 is a level that we've also broken through. That's an old support, and then you're sort of looking at the 75.50 area, 75.60 as your next level of resistance, and again that would be your sort of implied target area anyway from this breakout. A little bit stretched on the hourly RSI, so you might get a bit of a retreat back towards 74.45, which would give you a nice little entry point. You've got a little uptrend that currently comes in around 74, just above 74 figure. So there is a bit of room for a little bit of a retracement, but any sort of weakness I think is now a chance to buy. So with that in mind, I'll wish you good luck in your trading, and I will speak to you later.